This is Kimfx, and today we are going to talk about CRT. It's known as the candle range theory, and these are the subtopics we are going to deal with. On this video, we are going to deal with these subtopics, and I'm going to guide you on how to trade CRT, and this video is specifically for the traders in Kenya. So very soon I'll be making another video on this CRT for other traders now, but specifically this video is meant for the Kenyan traders. So if you are within Kenya, this video is meant for you. So we are going to cover the first subtopic, that is time. The second, candlesticks. Which candlesticks are we going to focus on marking on the CRT? We are going to talk about the sweep of the CRT high and the CRT low. Those sweeps, we are going to talk about them. Other people call them the turtle soup. We are going to talk about POIs that we are going to check on to before trading the CRT. We are going to talk about the entry model and the exit model. So stay tuned, like, share, and subscribe on our YouTube channel. And now we get started. So on time, once you open your trading view, you go to your settings, below over here on your UTC. And I know most of your UTC is at UTC -4. So you change it to UTC -3, +3. UTC +3. This one over here, this one showing Nairobi. That is what you are going to shift into. So as you watch this video towards the end, you will understand why I'm shifting this into Kenyan time. So you change it to UTC +3. Once you are done with that, you are sorted with time. So once I say we check at the 4 a.m. candle, you know that is the 4 a.m. candle. You just take over here, it's 4 a.m. at your point. Once we say the 8 a.m. candle, the same thing on your trading view, you see it as 8 a.m. So once you are done setting time, we go to the candlesticks. And below here I have examples of candlesticks. So here I have two scenarios on CRT. And on this video, we are going to talk about CRT on 4 hours time. The time frame we are going to use here on this CRT, on this specific video, is on 4 hours time frame. So these are 4 hours time frame. This is 4 hours. 4 hours time frame. You're going to use the 4 hours time frame. So you go. An example, you go to your chart like up here, like Euro USD, you check for maybe 12 a.m. candle or the 8 a.m. candle. You mark the low of that candle over here. This is just an example. You check the low of that candle, you mark the low of that candle, and you mark the high of that candle. The low of that candle is known as the CRT. Is known as the CRT low, and the high of that candle is known as the CRT high. You mark the low of that candle, any candle that you've taken, as long as it's on 4 hours time frame. Any candle, may it be the 8 a.m., 12, 4 p.m., 8 p.m. candle, any candle, you mark the low and it's on 4 hours time frame. You mark the low and you mark the high. The low is known as the CRT low, the high is known as the CRT high. Once you are done marking the CRT lows and the highs, you wait for something known as liquidity sweep. But before waiting for liquidity sweep, once you mark your CRT highs and CRT lows, you check for a point of interest either above that CRT low or above or below the CRT low. Assuming on the CRT high, above the CRT high, we are having a 4 hours fair value gap. Sorry about that. Assuming over here we have a 4 hours fair value gap, and below Below over here, we have a 4 hours order block. And the bias is bullish. We on a bullish bias, we have a 4 hours fair value gap above the CRT high. We have the 4 hours order block below the CRT low. So this is how we go about it. Now, once you have identified your CRT high, lows, and the points of interest above and below your points, you wait for something known as the sweep or the turtle soup. Now, assuming we are on a bullish trend on this is a bullish point of interest. So you are trading on the direction of the market, which is on a bullish trend. So you are not against the bias. So once this sweep happens to your point of interest, what do? You shift to lower time frame. You shift to lower time frame to get the confirmations to execute that trade. So the entry models I normally use on executing this trade, I use an entry model known as change in state of delivery, and sometimes I use a change of character. So in this video, I'll be showing you the two entry models. So once you get your entry, I'll show you the entry models on the live charts. Over here, it's just an example. So once you get your confirmations at this point, now where do you have gotten your entry? How do you exit this trade? The first way you can exit this trade is through exiting the 50% of that CRT range. The CRT range is between the CRT low and the CRT high. So from this low, using your gun box, you measure from the low to that high over there. You get the 50%, which is at that point. That is the 50%. So that will be your first take profit. For instance, you get at your buys from this point, your stop loss will be some few pips below here. Stop loss will be some few pips below there. Your first take profit will be at the 50% of that range. 50% of that range. And then the entire full take profit will go to cover the CRT high. And again, we have a liquidity pool above that CRT high, which is the internal range liquidity on that H4 fair value gap. So that should be your final take profit. Now that is how you analyze your CRT from the scratch, from getting the time. You mark the CRT highs, points of interest, entry, and how you exit. Now we normally have two scenarios of CRT. We can have the most basic one of the three candlesticks. We sweep the first candle, close within the range, and then the entire candle goes for the other high. Again, we have this other one. We have the CRT high. We have that CRT high, and we have this CRT low. You can see we have a multiple of candlesticks within this range before we came to our take profit. We swept this low, but before we swept this low, we had the first candle that didn't sweep. It was within the range, so there was no much focus with that. But the most important candle is this one that swept this low. After sweeping this low to a point of interest, again, you look for your entry model on that point of interest. The first take profit, 50% of that range. 50% of that range. Using your gun box, and you get your 50% of the range over here. That will be your 50%. So you have your take profit at that point, and then the final take profit on the CRT high. So let's dive into live charts, and I'm going to explain this into details. At this point now, we are going to have Euro USD, and this is an example that happened today, and we are going to do it step to step. At this point, we are going to deal with which candle? We are going to deal with this candle over here. We are going to deal with the 4 AM candle. So we mark the CRT high, the high of this candle. That is what we mark as our CRT high. and the low of that candle, we mark it as CRT low. We mark that one as our CRT low. After marking that as our CRT low, what are we going to do? We go to step number 2. We identify a point of interest. Over here, we have a point of interest where price is was at that time. We had this for our order block, known as the mid movement pivot order block. So we had that point of interest over there. So we have the CRT low. The low has happened. The sweep has happened to our point of interest. Now, what we are going to look for is the entry. So we shift to lower time frame, and in this case I normally use the 5 minutes. The 5 minutes for confirmations. So we come to the 5 minutes time frame where this happened, and here we go. So normally the entry model I normally use to trade my CRTs is known as change in state of delivery, and as you can see over here, we had change in state of delivery at this point. Once this candle closed above this area, you take your trade from that point. Stop loss some few pips below that low that swept that liquidity, and your first take profit should be 50% of that range. So the 50% of that range comes from this point. 50% of that range is at this point over here. 50% is at that point. We take off our gun box. So you have your first take profit at this point, and then the full take profit at the CRT high. That is how you manage to trade CRT. On these entry models, I guess, and I think most of you don't know, are not familiar with this entry model, but I'm going to guide you on this entry model on the next video, which I'm going to make. So stay tuned. The next entry model that you can use on this, is the one that you normally wait for the last bearish break of structure, which happened at this point. And then we had a change of character at this point. So after this change of character, after that change of character over there, what you do, you wait for a pullback back to a point of interest. And the pullback happened back to this point of interest over here, to that fair value gap. So you're going to have your entries at that point. You're going to have your buy position at that point. Stop loss some few pips below, and you take profit at this, and then the final take profit at the CRT high. So those are the two entry models you can use to execute, but I'm going to make a detailed video on the entry models, so don't panic on that. Let's check on another example. I'm doing this on the current market. So we go back to 4 hours time frame, and again on the 4 hours time frame, we can check for another candle to see what is happening. And over here we have this other candle. We mark the CRT high on that candle. Let me take this off. Let me take this one again off, and that buy over there off. So if you focus on the next candle, this candle over here, what time is this? The 8 AM candle now. If you focus on the low of that candle, you mark the low of that candle, and you mark the high of that candle. So the low of that candle is the CRT low, the high of that candle is the CRT high. After marking the CRT lows and the CRTs high, you check for a point of interest, either below or above. Below here, we have that another point of interest on the 4 hours time frame. So once this sweep happens to a point of interest, what do? You shift to lower time frame to look for entry. You shift to lower time frame, that is the 5 minutes, to look for entry. On the 5 minutes time frame, I can see we have a change in state of delivery at this point. We have a change in state of delivery at that point. So you have your buys from that point, from this point over here. Stop loss some few pips below that low. And now, you take the 50% of the range. Again, you get the 50% of your range using your gun box or your fib. So the 50% of that range is over there. So you're going to get your first take profit at this point, 50%, and then the entire take profit at that point. So that is how you trade CRT. And we normally say, once, the reason we're having our first take profit at the 50% of the range, we normally say a complete CRT happens at the 50%. Once the price taps the 50% of that range, that is a complete CRT. So to get more of my YouTube videos, just subscribe on this YouTube channel and turn on your notification bell. Very soon I'm posting the next video, which will be on entry models. Thank you for your time.